Hi, my name is Sally Gimmon, and I am the owner of the trustisyou.com, and I have a brand new podcast called Stop Paying Capital Gains Now. The reason I'm doing this blog is because I want people to understand what this spendthrift trust can do. Just to give you a little bit of background, this is a very specialized trust. 97% of the trust in the United States only avoids going through probate when someone passes away. This trust is for the one percenters in the United States, people like the Rockefellers and US presidents. I found out about it because I went down the rabbit hole and I got to save quite a bit of money on the first real estate deal I did with it. It was my first blog about short-term capital gains. I bought the property at $20,000. It went to auction at $64,000. The $44,000 I made in between, yay Sally, that $44,000, I got to save over $15,000 in capital gains. Guess what? Love my spendthrift trust. There are two different trusts. Today, I'm only going to talk about one aspect of the beneficial trust. And then there's a business trust that helps 1099 income earners save on their federal taxes. Now, to give you the full story, both trusts, the beneficial trust and the business trust, save you three ways: on your federal taxes, keeping your information 100% private, and keeping you from any judgments in case you get sued. Usually when an attorney sees that you have a spendthrift trust, they'll just walk away because they don't want to spend the time or money on trying to figure out how to get money from you. So I hope that doesn't happen to you, but it's an important thing to know. So today's aspect I'm going to talk about is rental income. Now, the beneficial trust saves investors in 5 ways. Capital gains, short-term, 23.8%, less than a year. Long-term, either 15% or 20%. I've had 2 other blogs talking about the short-term capital gains and the long-term capital gains. I hope you can go back and listen to that. Now, with rental income, in case you have any Airbnb, if you have long-term rentals, short-term rentals, interest income, I do notes. So I'm the mortgage on the house. People pay me interest rates. I have clients who do the BRRRR strategy, buy, rehab, refinance, redo, resell. That's interest income. And Forex investors. I feel sorry for you Forex investors. You get taxed 2 ways. You get taxed capital gains and interest income. So that's why you should know about the spendthrift trust. And then dividend income. If you're in the stock market, if you're doing options trading or anything else, these 3 taxes, rental rolls, interest income, and dividend income, are being taxed 7 different layers. So it could be from 10% to 37% taxes. I don't know what your personal tax rate is, but that's something to think about. So, and then the 5th way, don't want to forget the 5th way, is royalties. So if you know anyone who is a songwriter, an author, an artist, an NFT artist, NFT real estate, or NFT crypto, this all could change for you with, that's all considered royalties. And that's between 10% to 35%. There's 7 different tax brackets in that on the federal tax system. Now, if you get this trust set up correctly, you would only be filing a 1041 tax return, federal tax return. You would not be doing any state tax returns because they don't know you exist. So today's episode is about rental income. A little bit backstory on this. I am in Casey Eberhardt's Platinum Inner Circle. This is somebody in the inner circle. He called me on a Friday. He was selling a house on Monday. He knew about long-term capital gains. We had a scramble. We got him the trust. He filled out the paperwork. We got him the EIN number. He went to the bank. The title company was able to change the paperwork, everything else. He didn't get his trust booklet until 2 weeks later, but we were able to save him capital gains on selling the house. Just to give you a little bit background on him, what he does is he does a 2-year contract where someone is renting to own. So they pay $5,000. They go into the house. They're the homeowners. They're paying for everything that's in the house. They're paying him a monthly rent. It's going towards getting refinanced at the end of 2 years. At the end of the 2 years, the people either can refinance the house, move out, or pay another $5,000. So what had happened on this is somebody who had lived in the house for 4 years. So 2 years, $5,000, another 2 year, $5,000. Now they were deciding they were going to buy the house. He had the house for 5 years. He's in Texas. It was considered long-term capital gains. He was concerned about that. We figured out if it was going to be 15% or 20%. We're not too sure. So at 15%, he was going to save $16,700. $16,700. That's quite a bit of money. Congratulations to him. But when he told me his story about rent to own, I asked him, how many of these houses do you have that you're dealing with rent to own? He goes, oh, this is my one, and I have 7 others. So he had 8. He's now only got 7. So I said, do you know that the Spendthrift Trust will also save you on rental income? He's like, I did not know this. So I'm going to have to apologize. I'm going to read from numbers because I'm poor with, I'm dyslexic. So rental income is between 10% to 37%. And I said to him, I'm going to give you the numbers for 10%, 24%, and 37%. You need to ask your CPA what your numbers are. He goes, okay, fair. So $7,480 a month in rental income times 12 is $89,760. Lucky him, he's got 7 houses that are paying him $89,760. Now, just for the rent at 10%, I can do this easily. That he would save $8,976 a year. So 2022, 2023, 2024, 2025, 2026. He's like, oh, okay. And then I said, if you have $89,760 at 24%, so that's right in between 10% to 37%, 24%, you would be saving $21,542 every single year. He's like, okay, sounds a little bit better. And then I said, if you're at the highest tax bracket, I don't think he would be. He's 27 years old. He's a real estate investor in Texas. Don't think he'd be at the highest tax bracket, but still $89,760 times 0.37%, he would be saving $33,211 a year, every single year. So again, the emergency on this was he was selling a house. This was on Friday. He's selling this house on a Monday. We got him, saved him the capital gains on that house. Now, he calls me back 2 hours later. 2 hours later, after we had our conversation, he goes, hey, I opened up the bank account. I got this all taken care of. My CPA told me I'm at 27%, which kind of changes things around. So when he's at 27%, we know that he's going to be saving $24,235 every single year. Add that to the $16,700 we saved him on capital gains, long-term capital gains. He's going to save the first year of having the trust $40,935. So if we want to round up a little bit, it's almost $41,000. Now, this is not including the $5,000 deposits people are paying. They're unrefundable deposits that we did not include that, but I did tell him for each one of those deposits, it's an extra $1,350 he's going to save in taxes because of how he's got this trust set up. So his first year with the trust, $40,935. That's quite a bit of money, and he's very, very excited about this. Again, this poor guy is 27. I wish I was a real estate investor at 27. I started real estate investing at age 53. So y'all know my age now. So he's going to do, what he's decided to do is he's going to take that $48,000 he's saving, the long-term capital gains, and now the rental income with this. And instead of just getting an 8th house, he's going to get a 9th house. He's going to put half on each house, get the renters in there, start paying the mortgage. So he's 27 and he's going to have 9 houses. In 2024, he's going to have 10 houses. In 2025, he's going to have 11 houses. He's going to keep adding another house every single year to his dynasty. Congratulations to him. I'm very happy for him on this. So again, this client is saving the long-term capital gains and he's saving the rental income. So one more time, rent rolls, rental income, if it's short-term rentals, if you're doing Airbnb or Verbo, or if you're doing a long-term rental. He's doing 2-year rental agreements with his renters on this. Both of them, short-term and long-term, are going to be taxed between 10% to 37%, and there's 7 different layers in between on your federal taxes. He's going to save quite a bit of money because he reached out to me to help him save on long-term capital gains. He didn't even know about the rental income. So I put the cherry on top with the, I call them hundreds of thousands. I found out that's incorrect. It's called sprinkles. So he's saving extra money. If I could be saving money on capital gains, if he could be saving money on capital gains and rental income, shouldn't you be learning about this? Again, my name is Sally Gimmon. I am the owner of the trustisyou.com. This is my new blog that I've started, and I'm going to do a newsletter on LinkedIn too, using the same information over and over again. And then my new podcast is called Stop Paying Capital Gains Now. If you could please like it, listen to it, and enjoy it, I'd appreciate it. I hope you all have a beautiful week. Take care.